Hello, traders. Welcome to Price Plan Profit. It's Melissa, and I'm going to do today's trade review where I recap the trades that I took today. I'm going to start with the SPX chart, and the cyan box that you see on the screen represents the pre-market zone I was trading off of today. Very simple. Price above this zone, I'm looking to go long. Price below this zone, I'm looking to go short. The first trade of the day for me came here at 10:40 a.m. Eastern Time. I went short below the PMZ. I was buying the 63.85 puts because that was my first target. I went in with two contracts here below the PMZ, trimmed the first one here at the first target, and then exited the position here at the 50 fib or the golden pocket on the higher time frame. That was a great trade. Took the trade first from $9.25 to $13.15. And then down here at the exit, I exited at $25 a contract. My next trade came in this green zone. I waited for higher lows and then a breakout candle. I went with the 1 DTE expiration here because I was trading this higher time frame buy zone. I wanted to give myself more time, and when I do that, I typically buy $25 out of the money, which coincidentally put me at buying the 63.85 calls this time rather than the 63.85 puts. So I did go long here. I got long at the green zone down here. I bought these calls for $14.20. Tomorrow's expiration or the August 3rd expiration. I exited back here at the PMZ for $26.50. So another good trade there. My third trade of the day came here, a quick scalp when price broke down back below the PMZ. I went with 0 DTE because I was just scalping, again choosing those 63.85 puts, and I exited here at the bottom of the 5-minute EMA cloud. That trade was good for about $120 profit per contract. Again, just a quick scalp shorting below the PMZ. Then the fourth and final trade I had today was actually buying SPY puts rather than SPX. And that is that I started a position on SPY in the bearish golden pocket. I will show you that on a 4-hour chart and let you know what my trade plan is for this trade. Again, just a starter position with plans to add up here near 643. I bought the 641 puts. My first target is 639.26, and then my ultimate target is back here in this green buy zone. Um, my stop is a candle close on the 4-hour chart above 644.54, but right now I'm only about a third allocated on this trade. Will add to full allocation right around 643 and a half, and then stop out 644.54, a 4-hour candle close. So that covers the trades that I have taken today. Now, I was on a vacation, and while I was on vacation, my Freeport trade to the upside was trimmed. I got a trim, I believe Friday or Thursday, sometime right before I left, and then it was trimmed again while I was gone here at the 44.68 trim. My next trim would be here at 46.07 and then 47.89. That is the plan for the remainder half of my position on Freeport. So that is the trades that I have taken today and an update on that Freeport trade. Other than that, the only other position I have on is in HIMS, and that one just is not working out. I am not fully allocated on the trade, but have had no reason to get fully allocated because we just haven't made higher highs or higher lows in my zone that I wanted to add to the trade. The issue is, and the reason I haven't stopped out, is the value of this contract is not worth it to me to stop out of the trade. So, with that being said, I'm not going to do anything here right away, and I definitely would not be adding to the same expiration or the same uh, strike price, but HIMS is at the daily 200, which is a place that I would expect buyers to show up. So if I do decide to fully allocate my allocation amount that I'm comfortable with in each trade, I would create a new chart for HIMS and then trade that chart. So together, I thought it'd be cool. I don't normally do this on these recaps, but I thought it would be cool just to show you where I would be interested in adding to HIMS. So first I'm going to use this daily 200, which is coming in right at about $41 here. Then I'm going to use the bottom of this candle where we did not have an inside and a powerful move up exactly on the daily chart, but if I went down to a smaller time frame chart, I would find that inside candle, and then this is obviously an imbalance candle here. So for right now, tomorrow, I plan to watch this area on HIMS to see if buyers do indeed step in. I have about half of my typical allocation that I would be looking to start a position on HIMS here around $41 to 36.62. As far as targets would go, right here where we have the inside and down candle formation would be a first target, so right around 44.20 to 46.29, and then above here where we have another inside and down candle formation as well, close to the daily 50 up here at about $49 would be the ultimate target there. So for this trade, if I do fully allocate a position on HIMS, it would be using the $40 calls. And like I said, not fully committed to the idea of adding that additional risk onto this name. But if I am, this would be my plan, and a stop would be below 36.62. All right, and that's what I have for you today. I'm excited to be back with you in the Trendy Trading Room and, of course, here on YouTube. You can expect to see more videos and such. I had a great vacation, but I'm happy to be back. If you would do me a favor, hit the like button. Be sure that you're subscribed to the channel. And if you're not a member of the Trendy Trading Room at Simpler Trading, be sure that you check out the description below. There's a link for a $7 trial that gets you a 30-day trial membership to the Trendy Trading Room. All right, until next time, I hope you have a great day.